Today we are going to talk about local business taxes. Imagine you are the manager of a corporation and consider expanding business domestically or abroad through a direct investment. However, you wonder why in many countries, in addition to corporate income taxes, your corporation also has to pay local business taxes. Moreover, you realize that the local business tax burden varies depending on your corporation's location within these countries. In general, the imposition of local taxes upon your corporation can be justified by the benefit principle. Your corporation benefits from the economic and legal environment in the region where it is located, irrespectively of the legal form of your business. Only because the local government provides these public goods, for example, local infrastructure and education, you can conduct business there and ultimately generate profits. Importantly, if your corporation conducts business in several locations within the same country, each of the local authorities claim the right to tax part of your business profits. The business profits are partially allocated to the respective regions based on, for example, the share of payroll or sales. This is referred to as formula apportionment. Now you wonder about the amount of local business taxes you must pay. To determine the tax base, two different approaches may apply, the direct approach or the indirect approach. Let's first have a look at the direct approach. To determine the local business tax base, the starting point is the net profit, which also constitutes the corporate or personal income tax base. However, for local business tax purposes, this net profit is adjusted by a number of items, for example, by subtracting foreign income or by partially adding back interest costs. In contrast, if the indirect approach applies, the starting point for determining the local business tax base is the total gross revenue. From this figure, only certain specified costs are deductible, such as the material content of the cost of goods sold. The tax base is multiplied by a tax rate, which may vary depending on where your corporation is located within a country. Because every region offers different public goods, it is justified that tax rates vary between them. To summarize, local business taxes are justified by the benefit principle. To determine the tax base, either a direct or an indirect approach is applied. The tax base is multiplied by a tax rate, which varies by location within a country. Therefore, local business taxes should not be underestimated when making an investment decision domestically or abroad.